The main purpose of this entire seminar was to understand what are the various myths about the stock market. Most of the people you might see will say stock market is very risky, stock market has got a lot of flaws, and basically people are more afraid to invest more money in stock market. Now we'll try to understand what the stock market is and how it operates on a very small scale. Fine. So, what is our idea and why did we create this uh, platform for sharing this knowledge? So, the idea was to eradicate the myths about day trading and have a conceptual based with respect to stock market. Anyone who is a very small toddler, let's consider a small toddler, he is going to school. The reason why he's going to school is he is creating a conceptual base about his curriculum which he can apply in near future and he can excel in his life. Similarly, if people are investing or trading without any conceptual base or without any prior knowledge, they are surely going to fall prey to losses. So the next thing is like strategically tackle the volatility of the market. Market is not a stable platform. Market is very volatile. Market is seen going up and down every day, every moment. So there has to be some strategy. There has to be some way which where we can tackle this volatility and we can maximize our profits. So, irrespective of the market condition, how to always stay in profit. This is a very important point. People usually say that if we are in profits, sorry, if the market is going up, how can we go into loss? And how, if the market is going down, how can we gain profit? So, the simple concept will be explained later that even in falling markets, how you can secure your profits. Fine. Let's go little more into basics and try to understand what are the money growth strategies. There is job, business, investment, trading, contracts, real estate. You guys might know, I guess, three out of four, three or four. So let's understand what it is. Job and business. How much time do you require to get stable in a job or business? Around 20 years? Yeah, there are exceptional cases. People are stable in their jobs earlier, but that is very rare, right? So basically for job you have to study a lot, you have to pass an interview and you have to get into a job. Similar applies for a business. You have to create a skill set, you have to apply that, you have to gain potential clients, and then you have to continue your business. So what is the stability? Time of stability required is very high. What are the returns? Now the returns are medium or high depending on what work you are going to do. Then what is the risk? The risk is very low. In case of job, there is no risk, right? You are doing a job, you're doing it faithfully, you're doing it 9 to 5. There are very less chances that you will be thrown out of the company. Let's go to the next part, that is investment. So the time for stability is medium. Why is the time for stability medium? You have to learn the concepts, you have to clear your basics, then you can put in money. The returns are high. Of course, the risk is low. Now you will say that in investment, how can the risk be low? Once you have studied the basics, once you have studied the concepts, you can invest properly in those stocks which are sure to give you returns. Okay, let's consider what do you say, the returns are high and the risk is low. I'm saying about investment, I haven't said about trading. Trading is something which you will be doing every day on a daily basis. That is, every day's volatility will be considered as a crucial part in the trading. Whereas in investment, daily volatility does not affect much. You put in money today, you look at that money after 4 or 5 years. So if you see, the risk is very low. In 4 or 5 years, you have seen the fundamentals of the company. The company is going up, the company is gaining profits, so you are earning dividends on that, you're earning their margins, you're earning profit on that. That is called investment. Whereas trading is, you put your money today, in the morning, in the afternoon, you see the share has gone up, you release your money. Okay, now let's see the stability. Time for stability in trading is very low. Once you know how to invest, you know how to trade. a little bit basic concepts will change. That's it. The way, the platform, the money, everything remains the same. Even the person remains the same who is going to trade. So let's see. Time for stability is low. Returns are very high. Risk is high. Of course, if the stock instead of going up, your prediction goes wrong and the stock goes down, you will go into dire losses because you're doing trading. In one day only you have to buy and you have to sell it. Now let's see something called as contracts. Now I'll give an example about contracts. There is a company called Tata Motors, or let's say Maruti. So this company, the share is around 2,500 rupees. For Maruti, let's consider the share is 2,500 rupees. Now a person is willing to buy, a person is willing to take that money, the person is willing to take that stock, but he's saying that I think the stock price will change in the next few days. Now, what happens in investment? A person buys a stock, he holds it for a few years. Later on, he realizes, fine, the stock is going up, good, I'm in profit, I will exit and I will book my profit. Or the other way around, the stock goes down, the person is in loss, the person says, I won't take bear any more loss, so I am exiting this trade. This is known as investment, whereas trading is I'm buying it in the morning, until afternoon I feel fine, I'm happy with whatever I have gained or whatever I have lost, and I want to exit. So that is known as trading. Whereas contracts is, for example, share is around 2500 rupees, and we say that in the next few days this share will cross 3000 rupees. So what happens is I will buy contracts of Maruti Suzuki at 3000 rupees on this day itself. Today itself I will buy. So when the stock will touch 3000 rupees, the contract which I have bought, it will give me returns, because whatever I had predicted has become low. So time for stability is very low. See, this is the stepwise pattern which you have to do, ITC. So slowly you have to learn investment, then you go into trading, and then you go into contracts. Returns are very very high. I will maybe I will show you how people earn in contracts. Is with an initial investment of around 5,000 rupees, people start earning around 5,000, 6,000, 7,000, depending on which contract you're investing. So again, choosing which contract or which stock to invest is also an art. So risk. Now, if you see, the highest risk is in the contract. Whenever I am personally teaching any person about contracts, my first line of the lecture will be, whatever money you're planning to invest or put into contracts, just forget it that it was your money, because whatever money you're putting can nullify to zero. That is the risk which is valid in contract. So even after 3 or 4 years of experience, we don't put more than 5,000 rupees at a time. So around, if you put 3,000, 4,000 rupees in a contract, you are sure to gain good returns if your calculations or analysis goes correct. Fine. The last one is real estate. Time for stability is high. As you know, you have to invest lakhs and crores of rupees in real estate. Returns are low, but risk is also medium. So if you strike out these two, which require some base, see, real estate requires lots of money, and job and business requires some education. Yeah, now people might say that business does not compulsorily require education, but let's assume the normal cases. Whereas investment, trading, and contract also require education. You have to know the market, you have to understand the emotions behind the market so that you can invest. Now, when I say emotions behind the market, you have to always consider that I am not talking anything vague or anything fantasy. What I mean by the emotions of the market is, if the market is in the falling mood, if the market is falling completely, if you see Sensex and Nifty are falling, you cannot expect your stocks to give you great profits, because everything is ruled under one roof. So if Nifty is falling, of course stocks under Nifty will also fall. If Sensex is falling, of course stocks under Sensex will also fall. So you have to be ready, you have to understand the emotion of the market before you touch it. So let's go a step ahead. What is stock market in investment, trading, whatever all these things? Let's first understand investment. I have some money. I want to increase that money. So what I do is I invest some money. Now how to do investment? There is NSE, BSE, commodity and forex. These four are provided for investment. Now NSE is National Stock Exchange, which is the new one, but it is a better one. It is a most of the people usually trade in NSE. BSE is Bombay Stock Exchange, which is the oldest stock exchange in India. Then comes commodity. Now you see gold, silver, coal, these all things, these all commodities, these all comprise come under commodity section. So if you want, you can invest in gold and silver. Okay, one more small trick I will tell you about the market. Whenever the market is going up, whenever the stock market is going up, the commodity falls. Means if the market, if the Sensex and Nifty are booming up, then your gold and silver prices are going down. If the market is falling, then your commodity will rise. So these two are actually inverse of each other. So anytime if you want, you can go into the market and observe. Previously, a few days ago, due to the lockdown period, the market was in the falling condition. But if you see, you might have heard the news that gold has touched its a few years high. It has touched around 60,000, 70,000. So why that happened is because NSE and BSE were falling, so commodity was rising. Simple. And the last one is forex, that is foreign exchange. You want to invest in dollar, you want to invest in Russian currency, you want to invest in Australian dollar, anything that depends on forex. This kept aside is investment. Now let's try to understand what is trading. Trading can be done in equity and derivatives. If I go back to the previous slide, I showed you trading and contracts differently here. But equity and derivatives means equity means stocks and derivative means contracts. Okay, Tata Motors, Tata Motors share is under equity, but this the Tata Motors share will reach 3,000 rupees. This contract comes under derivatives. So there are very vivid range of derivatives which you can observe. You want to say there are all kinds of cases you can observe, right? So if you say Tata Motors will go to 3,000 rupees in the next few days, then of course the derivatives will be that the Tata Motors will go around 3,000, so you can buy that derivative. Again, there are derivatives of falling markets also. If you say no, Tata Motors will fall in the next few days, so there are derivatives which you can buy and keep. There are derivatives which you can sell also. Now, people who are new to the market might be a bit surprised and they will say, of course, if I can buy something, I can sell something. But the stock market is a little bit tricky. You can sell something which you don't have. So, how is that possible? I will tell you in this slide. Okay, basic terminologies in the market. Quick revision will do. Bull versus bear. A bull market means a high market. When the market is in profits, when the market is in green, we say it's a bull market. The bear market is when the market is performing on the lower side. Buy and sell, acquire the ownership or sell the ownership. When you buy a stock, what actually you do is you own a particular part of that company. Let's say you have got Aisha Motor stock, you have one Aisha Motor stock. That means you own one part of that company. So when you buy a stock, you own the owners, you have the ownership of that particular stock. When you sell that stock, you lose the ownership or you sell off your ownership. You mean you say that you cut off your ownership with the company. Long, short. So what is long and short? Buy when you want, sell when you want. This is long. Buy if you don't have, sell if you don't have. This is short. Um, let's say there is a particular stock. I'll give you each and every example in real time so that you have a basic understanding of what the stock market is. Even if you go on the internet and you check any particular M&M Finance or Mahindra and Mahindra, any stock you search, and you find that the stock you will see has a graph. There are a few technical indicators given below. There are a few ratios given below, and yeah, that's it. Like opening position, closing position will be given. Let's understand this. What is long and what is short? At present, I don't have any stock. So I see in the market that one particular company is there. Let's say ABC is the name of a company. And I think that I should buy this company because this company is going to increase in a few days. Or let's say in a few hours. We'll take the consideration of an intraday trading. So I think the company is going to perform very well. So what I do is I buy a few shares of that company. I buy a few shares and after some time I see that the company has gone up. So when I sell that share which I had, I bought it at particular price, that let's say 10 rupees I brought it. I sold it off at 5 rupees. I had got 10 shares. So what is the difference? Sorry, the stock went to 15 rupees and I sold it off. So there is a magnitude of 5 rupee difference. So when I sell it, I get 5 into 10, that is 50 rupees is my profit. Now let's say I predict that a particular stock ABC is going to fall. I say I don't have any stock, but I will say I am just predicting that a particular stock is going to fall. So how can I gain profit from that falling stock? So what I will do is I will sell off that stock in the previous in the first step only. I will sell off that stock. I know it's confusing, right? That how can you sell something which you don't have? But I told you this is the trick of stock market. You can sell something which you don't actually have. But short selling, as it is called, short selling, you can do it only in a day, single day. In the morning, if you sell something, till the evening you have to buy it compulsorily, or else you'll have to pay the entire amount. So let's say I have predicted a particular stock will fall around 10, 11 a.m. Yeah, so I uh, sell it off. When the market opens, I have sold that stock at around 10 p.m. The stock has gone down, and then I place a buy order. Now, at the end of the day, when the calculation is done about your trades, no one considers the chronology of your order execution. So, if you buy first or you sell first, it does not matter actually. What you have done first is it does not matter. Only the price at which you have bought and the price at which you are selling, that is the only thing that matters. So let's analyze this situation. We had sold a share at 10 rupees. The share came down at 5 rupees. We bought the share at 5 rupees. Now, how much is the magnitude? Let's consider we had 10 shares. So the magnitude is 5. Again, at the end of the day, what is seen? This person has brought the share at 5 rupees. This person has sold the share at 10 rupees. So this is how the calculation at the end of the day is done. And hence, again, you are in profit of 50 rupees. Fine. So let's go to the next concept, that is intraday or delivery. Intraday means in one day, in the span of one complete trading day, that is 9:15 a.m. to 3:30 9:15 a.m. to 3:30 p.m. This is the timeline where the stock market operates. So you do any trading inside this time span, it is considered as an intraday trading. Whereas if you do the trading in multiple days, like today you buy and you sell tomorrow, or even after a few years, it will be a delivery trade. Usually now the SEBI guidelines, the SEBI means the organization which controls this entire stock market, they have it's a government organization of course, and they have listed out a few new rules which was introduced, if I am not wrong, last week or last week. So according to them, for a share to be a delivery, you have to keep it for minimum 3 days. So delivery from now is, if you keep it for 3 days, then it is delivery. If you cannot sell it off before 3 days. Of course, if you sell it on the same day, it will be considered as an intraday trade. What is target and what is SL? Everyone has got a few targets in their life, that I want to achieve this, I want to achieve that. In stock market, target is actually the term which defines your profit. If a stock is performing at 10 rupees, if you say my target is 15 rupees, so that when your stock touches 15, you have to sell your stock to book your profits. That is the simple definition of a target. Of course, what is a stop loss? It is something like if you bought a share at 10 rupees and the share has started falling, you say that my stop loss is at 8 rupees. Below 8, I cannot bear the loss, so I will keep my SL, or I can keep my stop loss at 8 rupees. What happens in this scenario is, if the stock touches 8 rupees and you sell off the stock, your loss will be minimized. You won't go into more losses. Okay. One more very Important thing to understand is what is an order and what is a trade. Okay, let's take example of Amazon here. If you place an order for something, until that thing reaches in your hand, it is still an order. It is an incomplete transaction. Once the transaction is complete, it will be called as a trade. So a complete transaction is called trade and an incomplete transaction is called order. Okay, so I hope all these points are clear to you. If you have any points, you can put it in the chat box. We can discuss it once the PPT is over. The 5 W's of market: who, what, why, when, where. Who should invest? Of course, you should invest. Start young and stay financially ahead. Ideally is to start is 25, 28, because once you start getting more responsibilities, the more money you can't invest in the stock market. The reason being is you will have other high priority responsibilities at that time. Fine. So what is the stock market? What should we do in the stock market at present? We should start with the understanding. We have to understand how the market is operating. We should understand what is placing an order, how trades occur. You can start with paper trading. Paper trading is a very basic concept for anyone who is willing to willing to learn. So what is paper trading and how it is operated actually? You just take a paper and you can take a pen. In the screen you can see all the stocks when the stocks are performing, and on the paper you have to just write, this is the particular stock I'm observing. I place a buy order at this much price, and when the stock goes higher, you say I place a sell order. So on paper you can do your analysis without actually investing money, to gain some confidence, of course. Yeah. And before actually entering into the market, you have to do the technical and the fundamental analysis. Usually technical analysis is more important for intraday trading, and fundamental analysis is more important when you want to invest money. But it's always better to have a technical and fundamental analysis ready to understand the performance of a company, be it intraday or investment. Why? Why should we do this? So the reason is time is money, as we say. Early retirement, stability. See, everyone has a dream of early retirement and stability. You want to enjoy life before it becomes difficult to enjoy, right? It's yeah, yeah. You guys are young aged, so you can invest your money, and of course, see, all the people who are present here have got some amount of money which is always lying around. You're not putting it somewhere. So if you put it in the market, if you invest it properly with proper guidance or proper knowledge, you're sure to get some returns on that money. You put your money into the bank, right? People put their money into the bank. They say, I have put an FD, I have put an RD, PPF, anything. So if you try to analyze, if you go and check the statistics, whatever I'm saying, you can cross check it. The statistics in the last 10 years, the rate of FD and RD have been constantly dropping down. They have been constantly falling. Whereas the stock market, of course, previously also it was volatile, today also it is volatile. It is performing on its own speed, and you can anytime invest and you can anytime take the returns. When to start? Start young, learn in depth knowledge, trade with our community, and have secure bonds. Usually, what we do is we have a community of people who trade. So, where we can share our experiences, where we can learn from others' mistakes. See, people tend to do mistakes, and when a person is doing his mistake in alone, he can't understand where he's going wrong. In the class of 60 students, when the teacher asks who didn't do the homework, and a particular child gets up and says I had this problem, so we can find out a solution why the particular problem occurred. So where you have to do, of course, there are over the air platforms and at your fingertips, quick withdrawal anytime. So there are a lot of platforms available. There is Zerodha, there is 5paisa, there is Upstocks. I will be talking about this, how to invest the money and how to get the returns. Fine. I hope the 5 W's of the market are quite clear to you. These are just a basic thing which ignites the urge to invest in stock market. Choosing your broker. Now you will say, okay, fine, I have got this much amount of money, like I have got 10,000, I have got 15,000. I want to invest my money. Where should I invest it? So there are full service brokers and there are discount brokers. Okay, full service brokers have got high commission, high fees. They expect net worth clients. Again, there no research is provided, no public initial public offerings are provided, and there is limited selection of funds to buy. Now, who are full service brokers? If you see in the small image, you will see ICICI, HDFC Securities, Kotak, Sharekhan, Motilal Oswal, Angel Broking. These all are full service brokers. Of course, I will always suggest you guys go to the discount brokers, not because they are my personal favorite, but because it's your profit, right? Low or no commission. Most of the people don't even take any commission. Many of these service oriented items are free. Okay, there is no minimum amount which you have to invest. You can invest any amount you want. Okay, of course research is provided. They provide stock suggestions to you. You have to invest here, you can invest there. They will provide you calls every day. So even some initial public offerings are provided. No limitations on what funds you can buy. So you have to choose your broker wisely, because you are going to put your money to your broker in the initial stage, and later on that money goes into the market. So choose wisely. Market forecasting. This is one topic which has been mankind's so great dream since ages. How can we predict the market? Okay, any one of you, is it possible for you to predict what will happen in your life tomorrow or day after tomorrow? See, prediction of any single thing, you cannot predict your next second what will happen. But I'm not saying that I will teach you how to forecast or how to predict the working of the stock market. Of course, no. It's it's impossible. And if anyone says and if anyone claims in the market that they can do such things, then I guess they are the god of stock market, or maybe they are bluffing. These are the only two options which remain. So let's see what is market forecasting and how it is done. Okay, you have to understand the emotions. Firstly, as I said, emotions means how the market is performing. You have to trace the moment. If a particular stock is going up for a few days, how long it can go up depends on the fundamental analysis. Then you have to do the technical analysis and fundamental analysis, as I said. See, fundamental analysis means you have to go through the past record of the company, which will show if the company is in debt, or it is debt free, or it has got a few what let's see, if the company has got a clean record. All these things are come under fundamental analysis. What is technical analysis is if the stock will perform today, or it will perform tomorrow, or it will perform within a week, or it will perform within a month. These are the different selections how the uh, technical analysis can be done. Of course, nothing can be properly done without a strategy. Even while studying or even while doing any activity, people have got particular strategies. In the game match of cricket also, there are strategies, there are placement, there is positioning, there everything is important. Strategies and coordination is important. Similar way in market forecasting also, strategies are a very important role, and everyone has their own strategy basically, to say so. So whatever strategies like we utilize, those I won't say those are 100% correct or those are 100% profitable, but of course more than 95% times those have yielded results, better results than others. So what are the rules and regulations? Now of course, you play a game without any rules, it won't be a good game, right? It won't be that very much enjoyable. So if you want to earn something, you have to follow few rules. First important rule is limited liability. Till you become a perfect investor, till you become perfect, invest only 10% of the planned capital. For example, let's say any one of you who is present in the meeting right now has got 10,000 rupees. So I will say that at present, if you want to invest, just invest 1000 rupee, so that if you are failing, you can at least learn why you're failing and where you're failing. Okay. Second point, strict target and stop loss. If you say a particular stock which is performing at 10 rupees will go to 15 rupees, your target should be fixed and strict. That is, when the stock touches 15, you have to sell, you have to book a profit and exit. Even if the stock, if it goes to 50 or 70 rupees, it should not affect to you. That is the emotional balance which you should maintain. Of course, I will talk about emotional control the next point, but yeah, similar way about the stop loss. If the stock is at 10 rupees and you say yes, your capability to bear the loss is at 8 rupee, you should strictly maintain that 2 rupee gap. If the stock dips down below 2 rupee, below 8 rupees, you should not say that uh, I think I should keep it for some more time so that if it goes up, I will be in profit. So you have to maintain strict target and stop losses. Emotional control. The market is sideways, you know. If it goes up, it will surely see the bottom soon. Don't rejoice too soon if you are in profits. Instead, exit safely, and this applies vice versa also. How does it apply vice versa? For example, a stock is going up, you have gained your profits, you have exited the stock, but somewhere in your mind you're feeling that, oh, the stock is still rising. I can still get more, so I will put more money and I will try to get more. Trust me, people, this thing never occurs. This thing won't ever occur in the market, because once you have put some money inside the market, the second time when you try to trade, the price will be averaged out. So it's better to exit whatever profits you have or loss whatever you have. So let's discuss. So you have got an idea of what this market is, what are the basic terms, how it operates, what you can do. So I'll just give you a few tasks for you for the next few days. So most of the time what you have to do is observe and learn. Now the group in which you all are, I will be sharing each and every day few stocks, and with those few stocks I will be sharing the results of the stocks in the evening, so that you can get an idea of how the analysis is done. Then if this is something is optional, right, but recommended, have a systematic training. Something which is mandatory: paper trading. Of course, I told you how to do the paper trading. You can, in your free time, you can go and have paper trading. And mandatory, follow ground rules which we discussed. Of course, as time goes on, I will discuss a few more strategies and ground rules with you. I will put it on the group so that you guys can learn more and more from that.